Hey everyone, welcome to another video. I'm excited to get into this topic. This is something that has been requested in my Discord group and something that I've covered a couple times in my free coaching sessions that I give in my group. If you want to join, it's forever free, links in the description. But the idea behind this video is I'm going to be working on a case study. So I built this case study. There's a bunch of different topics that this specific sheet will cover. The idea behind this is something that you can study on, and I'll make a couple different videos on some of these topics. But what I in particular wanted to address was a little bit more of an advanced topic, and this is how to take a 15-minute point of interest and refine that 15-minute point of interest down to the 1 minute or the seconds time frame. And the idea behind that is so that you have such a small refinement that is less than 2 pips or so, right? So that you're able to take a seconds time frame entry from that refined entry within the 15-minute point of interest. When we're trading 15-minute point of interests, they can range anywhere from like 3, 5, 8 pips, whatever it is that they are. And so sometimes taking a trade from that, although it's very attractive to catch 3, 4, 5R, if you're able to refine a 15-minute point of interest down to the 1 minute or seconds time frame, then you have a point of interest that the moment that you get your rules met from such a small 1 to 2 pip zone, and you're already seeing an aggressive trading or an aggressive reaction away from that zone and the respect of that POI or a sweep of that POI, you can already begin to take an entry from the seconds time frame to get yourself with a 1 to 2 pip stop loss trade. Now, this isn't something that someone can do without proper trading and understanding of the market. Obviously, at this point, you should already have an understanding, if you're watching this, about what a 15-minute point of interest is, how to look for them. You should already have watched a few of my other videos. But if you're already a little bit more advanced, you have an understanding about these topics, and you want to take it to the next level, whether you're curious or you're ready to implement this video I think is going to be very helpful. Now, the thing is, I'm working with price action from the last, less than 2 weeks ago, right? So it's currently April 19th, and this price action dates to April 5th and all the way to like April 14th. So the idea behind this is that I've noticed when I've studied courses myself too, and I have PDF workbooks and all this stuff that, I get from people, when I was studying, all of the stuff that I learned was so perfect and so textbook like that when I actually went to trading, none of it really transitioned well. And so that's something that I really want to fix for people, because the reality is that there really isn't a perfect scenario every time when you're trading. And in fact, price action is a mess, and half the time it can be really hard to read. And I'm going to teach you tricks on how you can kind of clarify that in other videos. And that's kind of what I do in my one-on-one coaching, which it's free as well. It's a lottery on my Discord, so like people, ask someone guess a number from 1 to 10, whatever. Whoever guesses it, I give like 2 to 3 sessions a week. So if you want to watch those coaching sessions, they're all recorded, and you can see how I help people on those individual topics. But in this one, it's going to be a little bit more refined. Now, this case study that I built took a couple hours. It has a lot of stuff built into it. For example, like I have different topics and examples that I could cover in this. This video is going to be a little bit shorter because I just want to cover one topic in this. I don't want to make this video about like 3 or 4 different things and make it 2 hours long like my other videos, even though people seem to like it. I'm trying to keep this one a little bit more simple. So if you do want to get this case study that I've built with all of the stuff into it, the link will be in the description. It's going to be a trading view link, so you just click on it. At the top of your screen up here, you'll see like a duplicate button. If you're not logged in or you are logged in, you'll copy it to your trading view, and then what you're going to do is once you open this, you might not know how to use it. Everything's locked in here. Once you duplicate it, you go to the bottom right corner, and you're going to look for this button here. This is basically the stacked items icon. When you click on that, it'll bring this thing on the left. It's basically, these are folders that I've already organized with all of the stuff in here. These are the examples if you wanted to look at them individually. But the idea behind this is all you do is when you're looking at one example, you would click on the little eye, and it'll basically show you in particular what what's inside that folder, right? And so you can kind of clean it up to whatever it is that you're working on. It's a really good case study that I built, I think. So if you want it, it'll be in the description. Just click on that, and let's get into it. So hopefully this video isn't too complicated. Once again, I'm using imperfect price action because textbook-like entries don't happen all the time, and it's really unrealistic to expect things like that. To be a good trader, you have to be able to react and adapt to changing market conditions. And so this video, I think, will do a good job of helping you do that. Now, if you don't already understand 15-minute points of interest, this is not the video to start with, but let's get into it, right? So to give you a little bit of sight onto what's been going on, background, this is EU, right? Currently, structure is daily bearish, 4-hour bearish, 15-minute bearish. That's market structure, right? So we're expecting continuation, right? We always want to be trading, or at least 90% of the time trading with volume and momentum propelling our orders forward, right? And so we don't want to always be taking counter trend trades because most counter trend trades are not going to hold very well. As well as it's incredibly important to note that if you're taking 1-minute refined entries with a seconds time frame, you are going to lose a lot of money and you're going to have a very bad win rate if you're not, if you're not a complete master at it. Because when it comes down to taking seconds time frame entries, it's just simply not going to work very well counter trend. It can, and it might work for some of you guys, but realistically, keep your seconds time frame entries for more pro trend moves. It'll really help you a ton, trust me. Doing this right, you wouldn't need to do it the other way, right? So the idea behind this is, we're expecting bearish pricing. So we're not really going to be turned around looking for longs when we can expect, knowing that the daily is propelling price lower and the 4-hour is propelling price lower. We just broke 4-hour bearish structure. So the 15-minute is going to be basically what we're looking for. If there was a reversal, we would catch it on the 15-minute. Now, what would that look like? The 15-minute to create a reversal is going to have to make a 15-minute change of character, which we'll get plenty of times, right? They're not marked on this chart because it's not so important. But it also has to create a 15-minute break of structure. It has to break a strong high in order for us to truly consider it shifting bullish, right? And then it has to hold it, right? So, price is going to constantly be in pullback and continuation, impulse correction. So, we're doing our best to navigate a complex market, right? So we're starting to the left, right? So here what we have done is we've come to make this low. We've already had a pull back up to this zone, and up here we can already see that price is basically showing some weakness. If price was going to stick bullish after this change of character, then what we would expect is price to continue doing this until we get to a point of weakness. At that point, what we've already seen is that price is already basically shifting back bearish. So it's already correcting itself. At this point, once we've made this high, we've had this demand that pushed price to make this high. We've already been pushing away from it. So likely, even without having yet a break of structure down here, having this pullback, we can already see that this is going to be weak. Considering that this is one pretty big swing to the downside, likely this just came back to mitigate a little supply within this zone, within the 50% area of this big swing. And so once we can see this is already losing its momentum and it's showing more weakness, let's say no longer wanting to push bullish, right? We can expect the higher time frame intentions to bring back the market to continue bearish, right? So if what we're going to do is we're going to go down to focus on this particular example. Now the notes, they'll be important, but it'll be better if you read them on your own later. What we really want to focus on is this potential move. Now, we could treat this a couple different ways, right? We have a 15-minute point of interest. Now, you can go to different time frames to see if you can refine it. For example, like, okay, if we're on the 20-minute, right? Here we have some buy to sell wicks that get engulfed, right? If we go to the 30-minute, here it looks a lot more clean. This is what the 30-minute point of interest is, right? We have an inside bar, buy to sell engulfing wicks. This comes in to tap that zone. I mean, the idea here is you're trying to find the cleanest looking point of interest, right? And so we can do this a couple different ways, right? We can constantly refine this on the higher time frame, or we can go down to the lower time frame. And one thing that I like to do is I like to find, for example, usually I'll go from the 15-minute and I'll drop down till I can find something that's a little bit more clean. But what I'm really trying to find here is what's the point of interest? What's the buy to sell engulfing or the sell to buy engulfing that causes some sort of break in structure or basically some sort of change of character, right? So at this moment, for example, the candle that gets engulfed in this case would be this wick here, right? This buy to sell engulfing. On the 16 minutes, a little bit more clear, and you can kind of see this here where we have this almost looks like a shooting star candle. Basically, it's mostly wick. Basically the body is compressed down at the bottom of this, and this is where we've had enough sell orders stacking in that wick, basically pushing price to compress lower and lower before we have enough sell orders to basically just engulf to the downside and shift bearish again, right? So what we're gonna do is we're basically gonna go, let's say on the 15-minute, and what I want to do is I want to go to the candle that basically got engulfed. And so what I can do is I can click and to eliminate this one, and I'm only going to focus on this wick and when do we get some engulfing. So I'm going to go down to the 1 minute, and what I'm looking for is what does 15 minutes worth of price action look like here. So for example, this was at 5:45, right? And where do we have this? So this candle closes at what? 6:30. This is where the 6:30 candle would open. And so at this point, what I'm looking for is whether I'm on the 1 minute or the seconds, I'm looking for what's the candle that gets engulfed. And I've already pre-marked these for some examples. You can kind of see a couple of them here. So for example, if we look at it like this, what did we push into this? So we have a sell to buy that pushed price up to this level, right? We've pulled back. Price is reacting to demand and forms an extreme. That extreme sweeps to the left, but it does not break it, does not make a new high. So what this tells us is there's probably going to be some weakness. This is weak if it failed to create a break of structure to the upside. So likely we could see the beginning of bullish intentions. Now at this point, we've already had all this form, but this is how you're treating it, right? You're trying to understand and read what's going on with price. And so we have this reaction to demand, forms an extreme, wicks the high, no body closure. Price comes back. We're looking to see when does this demand fail, because that's basically where we get our first change of character, a clean one, right? Because this is the last sell to buy that created a high. Previous to that, we have this reaction to the demand that formed this wick high, right? But if we really wanted to be, let's say, confident about a good change of character, this would be the best place. At this moment, what we could see is we have this, basically what looks like another shooting star. Basically, wick sweeps liquidity to the left, and this is a buy to sell engulfing. This candle gets engulfed, and you can see we come back to tap demand again. Price basically creates a flip, forms another extreme, and then breaks. And here's where we can see that we have the failure of this demand. So at this moment, we've already had wicks go through. Now, this isn't a full body candle closure, but this is enough to see that this wick is basically that the pressure from up here was enough to cause a failure of this first demand. And so we can already begin to see, well, what's happening on this 1 minute time frame. So currently we have this candle here that created an engulfing to the downside. This is one swing here, right? We could consider this high to this low, but this is the area where basically where we can see that volume and momentum was injected into the market, because this is where we have the first bearish engulfing candle, right? Once price is pulling back a little bit correctively here, obviously on the seconds time frame might look a little more clean, you can see that this wick comes in to what? To mitigate this previous wick. So this basically I wouldn't consider something fully mitigated until that's at least at the 50% mark. Here you can see that this is where the 50% is. We already came in to mitigate that. So that's perfect. We tap this, and what do we see here? This is basically where price sweeps liquidity to the left. You can see that we're building a small range here, and then this is where we have a buy to sell engulfing that continues to push price lower. And what we're looking for is we can go whether on this time frame or we can even go down to the seconds to see if we can find a cleaner point of interest. Now here I've already marked that this is a 15 second point of interest that we could focus on. This one was a 1 minute, it's already been mitigated. But here, look at this. This is actually a very clean buy to sell engulfing. So here we have an open of the candle here, so there's a little gap. Price trades a little bit lower, basically to fill in that gap, and then pushes up higher. So this is basically the body of this, the body and the wicks of this buy candle covers this area. And here you can see that this sell candle is engulfing to the downside, gives us a change of character on the 15-second. And this is basically what initiates that bearish intention, because prior to that we were pushing higher in this 15-second corrective buildup of liquidity. This is the moment where we shifted bearish. So you can expect that a lot of volume and a lot of momentum, a lot of orders entered the market at this exact moment. And so what we're looking for is potentially to mitigate this zone. You can already see that what do we have here is we have a buildup of price here, a little range forming that gets engulfed again to the downside, and price continues to shift bearish. But this area here, this body, this 15-second has still not yet been mitigated. So the body of this is very much available to be tapped again, and likely we could come back to that. Now you could go to lower time frames and see if you could find it even more clean. Here you can see this, but this bearish engulfing candle does engulf 2 candles in its entirety. So in this case, the 15-second is a little bit more clean for this point of interest. In the other cases, the 1 minute works perfectly fine for this one. And what we could do is to refine this area, or instead of refining it, what we could do to protect ourselves is we could say, well, this is a valid point of interest, but this is also a valid point of interest. This is the 15-second, but this is also a 1 minute buy to sell engulfing. So this is on the 1 minute more visible, but this is also important. So what we could do is, instead of just focusing on 2 different areas, we could mark these as 1. And this entire zone is still about 3 pips. And so if we got a reaction to this zone, then we would take that, we would take an entry off of that. Now, this is right now up until this moment here, this is the 630 zone. So technically, this is the 15-minute candle prior that was the buy to sell engulfing. So what we can expect is that the next 15 minutes of candles, 15 1-minute candles, are going to be the candles that are going to be the ones actually doing the selling, right? So what we're doing is, in the 15-minute buy to sell, we wanted to know where is the selling within that coming from, right? And we can see here, it has to be something unmitigated. But now what the following sell candle looks like is like this, okay? So here what do we have? We have a push up to the upside. It closed as a wick, right? The wick was unmitigated. But then what do we have? This area here mitigates the wick. So now we have this area from that wick unmitigated. Let's keep seeing what happens. We want to see price go engulfing to the downside, continuing. Okay. And that's when we get price to really leave this area, right? So here, technically in this area, what we have here is it's very corrective. Price is basically mitigating every previous supply. And what that tells us is that basically what we have here is no resistance. If all of these points of interest have already reacted to each other, even if it's on the 1 minute, we won't expect a reaction from that zone anymore. And so what we can expect is when price comes to that area, likely those are just going to be swept very easily without any resistance. So now we know we have a couple points of interest, right? We have this one, which is this wick here that's been unmitigated in here, right? We have this 1 minute point of interest, and then we have a 15-second. We're marking them as 1. And this previously mitigated a previous 1 minute candle. So this is going to be the ones we're focusing on, right? So what we're doing is, now that we have these refined, this was the 15-minute zone. And that 15-minute zone was now refined to 1 minute and 1 minute. This is a 15-second nestled inside the 1 minute. And so what we're looking for now is to look for, when do we get a reaction to that zone? And so what we're looking for is, we're going to wait for price to approach our 15-minute point of interest. Now, of course, if our 1 minute zones or 1 minute refinements are not tapped, which, by the way, here you can already see that this wick into the supply did give a reaction to the first wick. If you remember that, it looks like it came to the exact 50% of that. Yes, it did. That's perfect. So you could have even taken a trade off of that one. Obviously, it was really quick. So, it would not have been a confirmation like entry. But this is what we're looking for. Let's go here like this. I'm going to hide the examples again. So the idea behind this is if price comes into your 15-minute point of interest, you're looking for a 1-minute change of character inside the 15-minute or as a reaction to the 15-minute supply to realign bearish. But if price comes in to your 1-minute point of interest or your seconds point of interest that's refined in there, then you already know that if you get your criteria, once you react away from that, you can be very aggressive and get a good clean entry off of that area, because now instead of having to wait for a 1-minute change of character, all you need is the seconds. And as you already know, lately price has been extremely volatile and market has been moving with a lot of power and momentum, especially lately, and it is very unforgiving. If you miss your opportunity, you simply do not get another one for a while. So what we're going to basically be doing is waiting for price to come into the POI. Once we get to the 15, perfect. We're in the 15-minute. Let's drop to the 1-minute and see what's happening, right? So what we're basically looking for here is a reaction to our point of interest that we just marked out. So let's add them on. Perfect. Look at this. Price came to react perfectly to the extreme that we drew. So what did it do? So the first reaction that we got was to this wicks here, basically swept some liquidity and then basically pushed price bearish, right? That was a continuation. But then price came to what? It skipped this 1-minute and it came directly to the 15-second. But obviously this 1-minute includes the 15 seconds, so whatever, that's safer for us, because if price came to this, we would have caught it. If it missed this one and it just came to this would have been perfect. But it really did come to the 15-second point of interest that, if you remember, that is directly where price was responsible for turning around, right? So here once again, this was the first buy to sell engulfing candle that shifted price bearish from the within the 15-minute buy of the buy to sell move, right? So now let's go back to see how price is reacting. Once we get to the 1-minute, we can drop to the seconds. So price comes into our 1-minute point of interest. Let's drop down to, do we handle this on the 1-minute or the seconds? We'll refine it if we have to, right? I think I might have done the 15, maybe the 5. Let's see. We'll stick with 5 for right now. All right, so price comes into our 1-minute refinement of the 15-second refinement within the 1-minute refined 15-minute. So this is the 15-minute. We're gonna measure these out. The 15-minute is about 11 pips. The 1-minute candle is 6 pips, 6.5, and the refinement, sorry, I messed up the number, sorry. So this is the 15-minute. The 15-minute is 7 pips. That makes more sense. The 1-minute is 3 pips. And this candle, because it for some reason was locked all the way over there, let's drag this right back in. Let's see. Unlock. Unlock. Come on. Why am I not able to move this? Sorry about that. Perfect. Okay. So this 15-second buy to sell engulfing is 1.5 pips. Now, if we set a limit on that, that'd be amazing, right? But obviously, I don't recommend setting limits. As you saw, we blew past one of them, and then the second 1-minute, we ended up just coming to the 15-second one, right? So if you set limits on these, you're gonna find that a couple of them are gonna get taken, right? And sometimes they'll even be swept. So what you want to trade is a reaction based off of this zone. And so what we saw is a liquidation of the previous 1-minute refinements, and what we saw is a mitigation of this 15-second buy to sell engulfing candle. This is the unmitigated buy, right? Upon mitigating this, what we saw is a very aggressive reaction away from here. This took about approximately 1 minute and 10 seconds to happen. Once we saw this aggressive reaction away from it, we can already see that price is very likely going to react by flipping from bullish to bearish outside of this POI. So what we can do is we can see how price is behaving here. So here what it looks like is that we're building some liquidity. So we have equal highs here, but at this moment, what did we come into? So we have this demand. This is the demand extreme that you can see. Buy to sell, sell to buy. Sorry, I've been working a lot today. Sell to buy. This is the demand zone, right? And here we have gaps. We can fill them with a little indicator, no gaps candle if we wanted to. But this is basically where we have the demand, right? Price comes in, gives a reaction. At this moment, it still respects this demand. We form an extreme. We're building relatively equal highs, and then, boom, we fail. Demand fails. We have a change of character here. What that tells us is what? That this point of interest is now responsible for breaking. Now, at the same time, you could say, well, likely price will come higher. Sometimes it comes to the 50% of one of these. At the same time, we have equal highs. Why would we take a short off of this? That might be too aggressive. So maybe we'll wait for a little bit more confirmation. So, we're building liquidity. It might get taken. We see continue building those equal highs. Boom, perfect. We have another break of structure bearish. This is internal, this is on the 5-second time frame. So what we have is we have this low, this high respects that high, breaks to the downside, break of structure. This is on the 5 seconds. So now we're showing some commitment bearish because now we have our second break of structure. So let's see what keeps happening. So building liquidity. What we don't want to see is some highs liquidated. We want to continue seeing lower pricing. All right. We're going to keep drawing all of these out. Okay. Here what we can see is that this was one swing to the downside. This is one bearish swing. This was a pullback that created this low. When price is basically pushing back up here, what we can see is a 5-second bullish change of character. So this is telling us that potentially we could be shifting bullish from this bearish reaction we just had. So we could expect a couple things. We might think, okay, well, maybe we have a chance to sweep these, or maybe we're going to continue higher. Unlikely that we do, considering that we just respected this level with such aggression. We're trading away from it. So what we're trying to find is a stronger commitment to take a trade bearish. And this is what our trade is going to look like. And you're going to see as it plays out. So currently, what we have here is we have some liquidity that we've been building. So this is equal highs, right? We've changed character bullish. We want to wait till we get a change of character bearish. All right, here we have a V-shaped recovery. We come into the left. It looks like we sweep this liquidity here. So this was relatively equal highs here that we've kind of just swept. We've taken all this liquidity. You can see that we're beginning to push bearish. Here it looks like we're already getting potential for a change of character. Awesome, change of character bearish. So we've gone from bearish confirmation, bullish change of character on the 5 seconds. So this is expected. If we're bearish, we're expecting this is just going to be a corrective pullback. And when we get confirmation that we're shifting back bearish, we're going to look for entry. Here we have a V-shaped recovery after we sweep liquidity. So this is telling us that likely volume and momentum are favoring more of shorts. Here we make this POI, pushes to the downside. We're changing character bearish. We come here, we make this buy to sell engulfing. This is a great POI because it's a buy to sell engulfing to the downside that gives us an official change of character. And so now we set a limit on here. Now you could have your POI just to cover this zone here, and that could be enough. But considering that we have this POI, we also have this one. And so if this was to be used as inducement and liquidated, which is unlikely because this is a buy to sell engulfing, this is a very high quality one. But if it does wick through and it comes into here, what we want to do is we want to be protected. So 1.5 pips is not a lot at all. So we're going to set an entry here, whether you take it manual or you set a limit. Price is hovering around, boom, taps us in, triggers in, and what do we get? Continuing bearish. We're getting more commitment bearish. Price is starting to melt. And so in this case, we go to the 1 minute time frame. And here we are, is we're waiting for more. We're basically waiting to see, okay, what does our 1 minute look like? We had this V-shaped recovery, right? Basically relatively equal lows. We've already just melted through these equal lows, so we're taking liquidity. We had liquidity target. What are we looking for? Well, if we're really considering this, we have a 15-minute, see if I can hide some of this so it's a little bit more clean. We have a 15-minute, where's the entry? Entry is a little bit hard to find here. Okay. We have a 15-minute supply, right? They gave a change of character bearish. We know the higher time frame is favoring shorts, right? And so this is the extreme. We basically got a 15-second extreme. We saw a reaction that was bearish from that extreme, and we had double confirmation bearish intentions on the 5-second time frame. We took an entry from a buy to sell engulfing 5-second. We're expecting the low to be weak. This is our target. And, you know, that's exactly what we should be targeting, because 15-minute supply pro trend is going to target weak 15-minute market structure. Sorry, hiccups there. All right, perfect. Boom. So we caused that break. That was the move. So basically, once again, we refined 15-minute POI to 1-minute points of interest. We found the best quality POI on the 15-second buy to sell engulfing that shifted price. You can see the wick that it came into. Now, we didn't set a limit on that. What we did is we took a confirmation based trade off of this, and you can catch with a 1.6 pip stop loss, or it was 1.5 originally, about 30 R on this trade. Now, obviously, we're targeting 15-minute weak structure, because we're assuming that the 15-minute is going to remain strong, right? So that's one example. Let's go to the next example. Hopefully this is making sense. All right. Let's hide that one. Awesome. All right, so this basically caused a break of structure to the downside on the 15-minute. So here we have this. Now basically what we have here is a new swing to the downside, right? Now, what happens here is, could we look to take a trade from inside there? Potentially, we could have looked to maybe take a trade from inside here, from inside this wick. We did not get any bearish reactions within this zone to indicate that we should have taken a short from here. And so once we saw this wick form, basically what this was is it was a fake change of character. Here you can kind of see it a little bit more clear. So at this moment, what we had here is price basically pushed bullish. This was a bullish change of character. Price then broke structure to the downside. Now gave us basically a bearish change of character. So we're expecting bearish pricing. When price took out the high, basically what we did is we got a bullish change of character, bearish change of character, and the bearish change of character failed. So what we can expect is when those happen, the extreme is going to be a hot zone to take a trade from. The extreme, right? So we can expect here, when we see this price action develop, what we have here is what looks like almost like a doji candle. Obviously, it's not perfectly in-centered, but here what we very clearly have is a candle that sweeps of liquidity to the left, right? It sweeped a strong high that caused a break of structure. The wick, we have a wick closure, which means it's a weak high, and when we cause break of structure, it becomes strong. And so already what we can see is that this is a buy to sell engulfing. The extreme directly causes a change of character. You can see that the sell is very strong and takes out this entire demand without a reaction on the 15-minute. And this high basically causes this break of structure. So body closure below the previous wick low, break of structure confirmation. So this is now our swing, right? And now we can see that we have some reactions in here. You know, price makes this low, pushes high. We have a change of character on the 15-minute. We break structure to the downside. We make this demand. Basically, what we can see here is that price is beginning to show some bullish intentions in the market. But at the same time, we have this unmitigated 15-minute supply that we expect we could potentially get a really nice trade from, considering this is a strong high that broke structure and it swept liquidity, right? So it doesn't necessarily need inducement if it already took liquidity on its own through the development of that POI. So what we're going to do is the same thing as before. We're going to take this 15-minute. This was formed at until 6:30. And what I'm going to do is I'm going to use the bar replay just to cover the actual engulfing sell. Because what I want to do is I want to discover what this 15-minute candle looks like inside, right? So at the 6:30 and beyond, from 6:30 to 6:45 is when we got that engulfing to the downside. So I want to know in here, where did we stack orders from? I can already see that we stacked some orders on the sell of this wick, right? And so what I'm going to do is I'm going to drop down to the 5-minute, see if I can have a cleaner point of interest. Okay, not necessarily because I need more data. Here's the 1-minute, right? So here we are on the 1-minute, and let's see if we already click on this, we can already kind of have an idea of the examples. Did I not mark the zone here? I thought I did. Let me see here. So here we are. What we have here is this is a demand. Price pushes up. Did I mark that? Yeah. Here we have a demand that pushes price up. Price comes back. We get a reaction to this demand, forms an extreme. And then what we want to do is, because now we know that from this candle, this is basically where the 15-minute, the next 15-minute candle starts. So we want to see, when does the first buy to sell engulfing candle occur on the 1-minute time frame, and then maybe we can refine it. Okay. Oh well, look at that, very clean. And so here we have this demand is strong, pushes price higher. We get a sweep of liquidity to the left, so this is one swing. Price comes back, reacts to this demand, forms an extreme flip, right? We don't really have an engulfing candle in here yet. Price is kind of in this range here. And what do we have? Basically here we have a doji candle that is a buy to sell engulfing. So this is the point of interest that I really want to focus on. And this is actually very clear on the 1-minute. I don't even need to go to the seconds. So I'm going to drag this all the way across. Oh, I guess I did mark it out. It just wasn't visible. So let's drag this back all the way over here. Same thing anyway. Here we go. I'm fixing this so that when you go over it, it'll be easier. All right, so this is the buy to sell engulfing, the doji that takes the first reaction to demand and causes demand failure. So this demand reaction, when we take this, that's basically when we're getting our change of character. We're officially getting failure of this demand. And once we actually run straight through it, you can see this is the buy to sell engulfing. Now, this candle closed at what? The 6:30, and at 6:45 a new candle was forming. This happened at 6:47, and then at 6:48 we have the first engulfing candle to the downside. So now that we have this POI, we have a 15-minute zone that is 10 pips, and we've refined it down to a 2-pip 1-minute doji buy to sell engulfing, right? So now what we want to know is, how does price react when we come into this POI? We already know, let's go back to here, we already know that this caused a break of structure, right? So as far as we know is we have, let's hide these notes here again so they're not in the way. This high is a strong high that broke structure to the downside. And you know, we had a couple more breaks, but this is an extreme that takes liquidity. So we can expect some sort of reaction to that. So what we're going to do is we're going to wait until we get a reaction to this zone. We already know that a 15-minute zone, if we get a reaction to the 15-minute and not the refinement, we need a 1-minute change of character. But if we get a reaction to the refinement, that's a 2-pip 1-minute zone, then we can take a seconds entry off of that. So what we're going to do is going to wait to see if when we tap into this. All right, let's keep going. All right, that's the first tap of the 15-minute. We don't really trust the first high. This is just at the bottom of this. So likely this is going to be the liquidity that gets taken into the move, right? Plus we don't get a change of character anyway. This is the low that would have to go, right? All right, price comes in, boom. So we've officially tapped into our 1-minute point of interest. So now let's drop down to the seconds. Usually we'll drop down to the 5 seconds. You can drop to the 15 or the 30, depends. but the 5 seconds is obviously more data. Awesome. So here we have a sell to buy engulfing. You can see how aggressive this buy candle is. Obviously, if I take the no gaps indicator, it's going to be a little bit harder to maybe understand what's going on. So we're going to leave it on because that's probably what you're used to seeing. So here we have this buy. We come into this zone. So the moment that we've tapped into this refined 1 minute doji buy to sell engulfing, we are looking for aggression to trade away from here. We've already respected this so far, right? And we want to see trading away from it. And we have our demand here that we need to see a change of character of before. So price is coming higher. All right, it's kind of messing around in there. But we know that this is the sell to buy that pushed price higher. So we need this to go before we're confident about something, right? Let's also add this in here. And forward. All right, so you can already see, what do we have here? This is a buy to sell engulfing on the 5 second time frame. That's kind of crazy, huh? But that's exactly what we're looking for. We have 1, 2, 3, 4, 5, 6 bearish candles following this buy to sell. So we already know that in here, this is where we had the injection of volume and momentum, a high entrance of orders in the market at 3:16 and 15 seconds. This formed, and this was the first buy to sell. So this is the candle that we're going to be focusing on. So price comes into this demand. Is demand going to hold? Fails. Immediately now that we have here is we have a buy to sell engulfing that directly broke demand and directly caused change of character. So this is the highest quality point of interest. Can we see it on the 15 second? Wow, look at that. The 15 second is just as clean. This looks beautiful. All right, let's view it from the 15 second. Now at this moment, obviously what we're going to be doing is, because we have the buy to sell engulfing, right? This is a very aggressive recovery from this 2 pip zone. This is the whole zone here. This is the refinement in the 15. We respected it. We did not go through it. We respected it by how much? By 0.1 pips. So we did not violate this zone. We already have a change of character. The extreme caused it. We're setting an entry here, and that's going to be aggressive, but it makes sense because that's the zone, right? So price comes in, tap. Now, what can we do? Technically, we don't need to cover more than that, because if that's where orders entered from, we should be able to get away with a 0.3 pip stop loss, right? Now, obviously, based on spread and all that, we want to maybe give ourselves a little bit room, right? So let's go with a 1 pip stop loss. But you'll see that how perfect this reaction was. Look at that. That's amazing. We go to the 5 seconds. Look at how clean that looks. Price came in 5 seconds, 10 seconds. It just stalled and then immediately engulfing to the downside. So now we have another buy to sell engulfing away from our point of interest. Now that only happens really when you're trading pro trend, because the daily is pressuring for sells, the 4 hours pressuring for sells. We're also 15-minute bearish. When you're trading counter trend, you're not going to find that kind of volume in these trades. That's why this is so important. All right, so let's see what happens. We already know that we're going bearish. We need to see this to go to get confirmation that we're going to be able to hold this. And you can even set your trade to break even if you want. I don't do that because this is ridiculous. I mean, this is such a good trade. If price comes back to your POI, it does not matter. We're getting a refined 1 minute. All right, let's go down to the 1 minute here. All right, so what do we have? This is what it looks like on the 1 minute time frame. We have price come in to tap the 15 minute, pulls back. Obviously, we need a change of character to really take it seriously. This was the low that pushed price into the supply. Price pulled back and then propels itself into the 1 minute refinement. It was a doji candle, buy to sell engulfing once again. What did we form? A doji candle, buy to sell engulfing on the 15 second. The 5 second was also super clean. We took a trade. It was a 0.3 pip zone. We have a 1 pip stop loss. We want to see, what are we doing here? All right, looking at this point of interest, we know we're trading from an extreme 15-minute supply that took liquidity to the left that caused break of structure. We know that the extreme directly broke structure in this one, so we already know that this is a high quality point of interest. Now, once again, look at this on the 1 minute. This is what this point of interest looks like. The first buy to sell engulfing in that 15-minute range. And this is what the reaction to that same zone is. Where are we at here? Almost there. There we go. That's what the reaction out of that zone looks like. That's crazy, right? So anyways, what are we targeting? We're targeting the 15-minute low because we want to break structure again. We know that the higher time frame is with us. This is what the aggression of the 1 minute looks like. If you did not catch that first entry, you are not going to find another entry back in there. Realistically, it's kind of gone. So let's look at the 15-minute. This is the point of interest we're trading away from. We know that we've broken structure here. 1, 2. This is our target because what? The daily is bearish, the 4 hour is bearish. We need to continue breaking 15-minute structure. Now, here's what we also know. We have a change of character bullish, right? Here we have a sell to buy. Here we have demand that has basically been building up liquidity. Here you can see all this liquidity that we've been building up. This is the weekly open, the new Sunday open. We have a trend line liquidity here. We have liquidity here. Let's see, do we have any notes about anything? Buildup of liquidity, nothing too much. So we're just going to be targeting the break of this because we don't expect this to hold. Because if this strong, extreme supply broke structure to the downside, and this is a weak 15-minute demand that fails to break this strong high, this becomes weak, this stays strong, this should go, right? So continuing, so what the 15-minute looks like, a little bit of patience here is required. Price already gave a 15-minute change or 15-minute change of character, 15-minute break of structure. We already broke one. Obviously, we're continuing lower. Take some patience here. Boom, break of structure. All right, this POI 96R. Obviously, that's incredible. Did I catch this trade? I did not. I think this happened during, what session did it happen in? This happened during London session, and I trade New York now, so I was not awake at that time. But I do wish that I caught that, obviously, because that would have been a beautiful trade. So that's the second example. Let's get into the third and final example, because I know this video, I was trying to make it short, and I don't know what happens. I must be a slow speaker. I hope you guys are watching this on like 1.5 times speed. So anyways, we break structure to the downside. Every time we break structure, that strong high becomes protected, right? If we wick through it, that's a sweep. It's a violation, not an invalidation, right? Protected. This broke structure to the downside. This was a massive swing to the downside, right? Here, what do we have? Here we formed demand. Price very impulsively pushes to the upside. We come into the supply. Supply basically is ran through. We get some reactions in here, but we're building structure. We're showing a very corrective buildup of liquidity, right? So that usually indicates that we are going to run through this area as price is corrective into the POI. This is going to be another example of imperfect price action because this is really important. Look at the engulfing candle. So here on the 15-minute, we have this buy to sell engulfing. I would have loved for price to come into there, but the reality is that price is imperfect. And so the wicks are always very important. If you don't go down to the lower time frame, the wicks are going to be very important to use. If you go to the lower time frame, it's going to be something in there that you'll be able to see. So had you just marked out the 15-minute, we wouldn't have caught it. In this case, we're going to look at both because as you see, the wicks are the one that got the reaction. So what we're going to do is we're going to go to the candle that gets engulfed, right? So we're going to see this is the 15-minute from 3 o'clock to 3:15. The sell candle that is engulfing is 3:15 to 3:30. We're going to go down to the 1 minute once again because we want to see the engulfing action happen on its own, right? Now, we don't have to necessarily watch it with this stuff on it, but let's see what it looks like. So here what we see is that we have that high. This is the next 15-minute candle forming. Wow, look at that. We already have a doji candle, just like in the last example, buy to sell engulfing to the downside. All right, so that's perfect. We want to look at that one. What's price doing here? Oh, it mitigates it. So this is now mitigated at least to the 50%. There's no need for price to come back to that zone. But what we do have now is this area here that we could focus on. Let's continue watching. We have more zones here. Now price is in that wick zone. Here we have a buy to sell. Is it engulfing? Well, the buy candle did not necessarily get engulfed, but we do see within these wicks, this is where the volume came in from. Actually, it looks like if we look at all of these zones, the only one that really is engulfing is here, and even then, it only engulfs this inside candle here. It actually does not break out of this. All of these wicks are where the momentum came in between these candles. And so here what we can do is we can basically highlight this entire buy candle. We know that the sell candle did not necessarily engulf it on this time frame. Maybe if we went to a different time frame. On the 30-second, we do see that we do have an engulfing here. It's not necessarily the cleanest. The inside bar gets engulfed, but it's not really to my preference. Here we have this one that gets engulfed. Not really a fan of that price action. What we're going to do is we're going to stick with the 1 minute. And what we would consider is, in this case, because we have a lot of demands, is what each reaction gave. So it looks like this formed as a result of this demand. Let's look at the actual markups here. Okay. So here on the 1 minute, we have this. This was the 30-second candle. We did not look at that one. All right, buy to sell engulfing on the 30-second. Perfect. This is a very high quality point of interest if price comes back to it, right? Then we have, so this is a demand that pushed price higher. Reaction formed extreme flip, 30-second, buy to sell engulfing. That's valid. Price comes lower. This is another demand. Price really doesn't give a reaction here. It just kind of stalls for a minute. Price then pushes lower. This is the demand. We immediately invalidate it, or we wick through it, so there's no interaction. Price basically pushes lower. We have this area. This is a high volume demand entered here. If you look at this, this is actually where we have the largest two buy candles that are engulfing in their nature, full-bodied closure, candle closure, buy candles here. So what it looks like is in this sell to buy, this is where the most volume came into the market. This is very clean, right? So you want to look for stuff like this because that's where the orders came in from. So when price comes down, even though the 15-minute candle is here, this is 9-pip zone, we can kind of see how realistically it looks like this area is where we gave a reaction to. So price came in tapped, we have a buy candle, and then we have the sell. It says 30 seconds. Let's see again on the 30 seconds. This looks a little bit more clean. So we have the 1 minute is basically this one here. Let's measure it. Take this little handy tool here. The 1 minute is about 2.6 pips, right? Now, if we take the 30-second candle, it is valid and we could refine it. This is about 1.5 pips. So here's what I do. Every time that I can refine from a 1 minute to the seconds, what I would do is instead of just picking the smallest one, I'll just deepen the color or darken the color of the smaller one. So for example, this is my 30-second, my 1 minute point of interest, right? But this is my 30-second. Because I know that if price comes into this one, I'm ready to take a trade. But I also know and I'm aware about this area here that could come back to it. Obviously, price is going to be magnetized to the area that truly gets engulfed. You know, and at the same time, what we could also do is if we're unsure, we could just take the 50% of this. And maybe that's enough, right? It looks like it would come into this one. So the 50% should come into here. And so we'll see if that's what we got the action for. So anyways, we're on the 1 minute. We see price action. All right. So this was the last buy to sell candle before we had this swing to the downside. That's where true commitment came into the market. All right. So now let's go back to the 15-minute. So we have our point of interest drawn. Let's go back here. All right. So that is this one, and it gave a reaction to this one. This is what broke structure to the downside. 2 breaks of structure, and then we have multiple weak lows here that we could potentially target. Now price here is showing what? It looks like it wants to go bullish, but we also know at the same time the higher time frame is bearish. So instead of just being closed-minded and looking for a buy, right, even if you might be looking for a buy from here, understand that if price is going to realign bearish, it's going to happen at an area that is a strong high that broke structure. And this is perfectly it. So we have two POIs, right, that we could focus on. Let's go to see what price looks like approaching this area. Okay, we're going to go down to the 1 minute. So we already know if price comes into our 15-minute point of interest, meaning like even the middle area, because we only have two areas that we're focusing on. So if price comes into here, I'm looking for a 1 minute change of character. But if price stops at this level or at this level, then I'm taking a seconds time frame entry. So let's watch to see how price enters into the zone. All right, price is not yet. Came in a tap, perfect. So price came into my 1 minute refinement, my 30-second refinement, sorry. We're gonna drop down to the seconds time frame. Let's do the 15-second. Awesome. So here's what we have now. So we have, and this is very important, this is something to write down in your notes, the point of interest that pushed price into the new point of interest, right? So if we're looking to take a short from supply, look for the last demand that pushed price into the point of interest. The other point of interest that matters is the one that it causes a break or a failure of that supply, because that's what we're trading against, right? So this is the last demand that pushed price into supply. Therefore, this is the area that we want to see a change of character from, or basically a failure of, if we're going to shift, or else this should hold, right? So anyways, we're on the 15-second. Price gives a respect of the supply to the 50% of this zone, which we said we would mark the 50% of the 1 minute, so perfect. Look at how small this zone is. This is about like 1.5 pips. Awesome. So we respect supply, we're trading away from it. This looks like a V-shaped recovery, right? We're coming into demand. We want to see if we get a reaction. All right, perfect. We tapped the demand. Now what we're looking for, now at the same time, you could react and say, okay, we're going to mark this one because this is demand. When we're on the seconds time frame, we're looking at ranges, right? So we could say from here, or in this case, what I did is I marked from here this sell to buy price action, right? Because this buy candle engulfed all of these. So I'm marking out that area. I'm looking for a reaction and then a failure. All right, so I'm not really getting a strong reaction. I did not push away from this demand, so I can kind of see that there's some pressure in there. I'm looking for a failure. All right, we're pushing away, so we're holding. All right, we took some liquidity from here. I want to see this price come into up here. Let's see what happens. All right, pushing price higher. All right, looks like we're creating a supply zone. So here we have a buy to sell, right? Let's see what happens. I want to see a change of character. All right, that high, boom. All right, so here we get a change of character. We break bearish, basically break this demand. So reaction to demand, we formed an extreme. This is a flip, right? This flip took liquidity to the left, right? It also built some liquidity in here and took that. So this is, it took liquidity, so it doesn't necessarily need inducement. It already has some. It already took some. This one directly broke to the downside. So if we're following market structure, we know, for example, that this is one swing. This respected that high. We broke to the downside. The expectation is that we continue to do something like this on ranges, right? We're trading the ranges. So this high, this is where we have the buy to sell. We still reacted to demand at the end, right? Buy to sell, break, right? So now what we're looking for is, all right, we should wait for price to come into this POI. All right, change of character bullish now. So it looks like this area was a buy to sell that broke to the downside. Now we have a break of that. So now what we have is bullish change of character. So this is the pullback. Once again, remember, right? This is what we expect at this moment. This is a pullback because we didn't have a change of character. This is basically showing weakness as it failed to print with the direction, the price was currently bullish into this zone. So the expectation was bullish, right? But if this area is going to hold this 1 minute refinement, then we're going to change character to the downside. So now we break structure to the downside. So the expectation is that the pullback is not going to break that high because it's considered strong. So then the continuation, we get pullback, continuation, pullback, continuation, right? So let's mark our zone. Okay, let's do this. All right. All right, so already here, what do we have? Here we have a change of character bullish. We're expecting the pullback potentially. This is the low, pushes to this high. We already have an engulfing candle right here, buy to sell engulfing. Let's see what it looks like on the 5 seconds. That's very clean. We actually engulfed 2 candles. So we can just keep it on the 15 seconds for if it keeps it cleaner, right? Awesome. That looks good. I want to see a change of character. I want to see alignment back to going bearish, ideally. All right, it's fine. Awesome. Okay, so what do we have here? We have this swing to the downside that broke structure and changed character. This is the swing to the downside. What do we have here? We have a pullback. Here we have the first buy to sell engulfing. This is what it looks like on the 5 second. Here we can see that that engulfing candle is very strong. So a lot of the, where did the orders flow into the market from? If we look at the candle that got engulfed, realistically, look at this. Look at how exact price is to that. Came in just to tap it barely. If you set a limit on this 5 second zone, you know, by spread, you probably wouldn't have got tapped in. But this is the area where we have the first buy to sell engulfing. We have a V-shaped recovery, right? And we wicked into this zone. So that should be our entry, right? All right. All right, we come back into that zone. So at this point, we have a change of character bearish already again. So we should have some more confidence because at this point, what do we have? This was a pullback. We have a change of character to go bearish. So we should believe that this is going to hold. This is our supply. If you didn't get in from the first wick, we still can see that that's valid. It should hold. Price comes back into play around, respects the supply. Boom. Pushes right back through. Another engulfing candle. And then do we have... All right, here we go. This is bearish realignment, right? So at this point, what do we have? We have a change of character bullish. We have basically price comes in to tap supply, gives us a change of character bearish. We can see that this could potentially be used as inducement for the wick, right, on the 5 seconds. Because let's say if spread didn't tap you in on the extreme, let's say here this was a low. Spread, let's say if price didn't come into that zone, it eventually does, and you can see it comes in a little bit deeper, it comes into the wick. The wick is basically where the selling pressure came from. Excuse me. This is the buy to sell engulfing. There we go. So we're trading away from this zone. So now that we have this break of structure, this was the low, this was the new lower high, expecting lower low. We're expecting this to hold. Now potentially, this would be a good place for a re-entry if price came back into here as we left a POI. We could get a re-entry off of here too, potentially, right? If price comes back to that area. Now, where are we trading from? This is a strong 15-minute high. I'm gonna get a glass of water here. This is a strong 15-minute high that broke structure to the downside. The expectation is what? Well, if this was a bullish change of character, at least we should come to the demand. But considering that we know that price is bearish on the higher time frame, let's keep taking shorts to make new structure to the downside. That's the expectation. We keep taking them until they fail. Price is bearish until it's not. Price is bullish until it's not. Until we begin to get failures of this, then we should change our mind, right? So this is what the 1 minute looks like. Oh, look, it came back to the area where we could have gotten an entry from. I believe on the 1 minute it looks like wicks. Let's see what it looks like. Hopefully price will load. Awesome. This was a perfect place to get a re-entry from, considering this is a buy to sell engulfing. That's where it broke structure. So we could have set a trade off of this. This is just another one we could have loaded up on, just like in the example. Awesome. Let's just carry this one in. Let's go back to the 1 minute. We're looking to break the structure. Price comes back into it. Oh, that one got wicked out. All right, so that one didn't work out. Did price come back into the other point of interest? I don't think so. No, the other one would be up here. Let's see if it comes up to that. It's fine. All right, engulfing candle. This is where we have a buy to sell engulfing. Here we could have gone to re-entry off of this wick. Same thing, buy to sell engulfing. That's where you get your next entry from. Let's keep watching, see what happens. Price starts melting. Let's go down to, or let's go up to the 5 minute now and see how price behaves. Price is kind of messing around here for a little bit. If it comes back to the POI, then I'm taking a trade off of this. Let's see. If we get a retap of this, I'm setting a limit on this if it happens, right? Not necessarily it will happen, but let's see. I mean, we're just playing around here now at this point. All right, let's keep going. Does it get tapped in? Does not look like it. All right, obviously, you know, and we're just, you could follow the continuations to the downside. If that gets tapped, we get in. All right, perfect. We would have gone in there. This is without going to the lower time frames. That's a 5 minute POI. Look at that massive push. All right, so we have another entry. So even if we took 2 losses, it doesn't matter because look, this trade ideally would be like 20 plus R. We take a 1% loss, another 1% loss, it doesn't matter. Awesome. Prices with aggression. Look at that. Awesome. So now we have these 2 entries. We have, we have a couple here, right? This one didn't get tapped. This is our original. Let's see if I have to unlock it. Excuse me, I have the hiccups now after recording for so long. Awesome. Okay, so this trade, the first one initially that we took on the seconds time frame. Let's hide the lines here. This is what the entry looks like, right? We got in with a 1 pip stop loss. The zone was 0.3 pips, I believe, right? And we got a 110R trade targeting 15-minute structure. We got a re-entry on this one without a single refinement, right? Without even going down lower than the 5 minute time frame. 4 pip stop loss, pretty big stop loss, whatever. Still about 23 R. That's awesome. So already there you have about 130 plus R. Now obviously not everyone's going to catch trades like this, but the idea behind this is that it's possible. And that if you, with patience, want to work on refining your points of interest, and instead of you focusing on catching more trades, how about you focus on catching a better quality trade, right? And focus on refining a point of interest. If the higher time frame is bearish or the higher time frame is bullish, trade pro trend. Look for a 15-minute point of interest that is strong. It needs to directly result in a break of structure, right? Not necessarily just like this one broke structure here straight on, but that this area is a strong area that is known, you know, for causing a break of structure or a change of character that's pretty strong. Like in this case, for example, here we knew price was bearish already. This was a swing to the downside. We had a pullback to about 50%. We tapped into this supply to the left that I'm sure we could have gotten a seconds entry off of as well, right? This is already giving us realignment bearish, so we're anticipating a break of structure that's bearish. Price comes in to a 1 minute refined to the 15-second zone, and we took that trade. Worked out perfectly, right? Break of structure. Perfect. We have a new swing. Price comes up, gives no reaction in here, sweeps the high, and then what results in break of structure. You didn't have to take a trade during any of this time, right? But when price comes back to the extreme, what do you expect? Well, price comes back to that extreme. This one was a 1 minute point of interest, the doji, right? We came in, we respected that 1 minute point of interest so clean, right? What does that trade look like? This trade was 96R, right? Caused a 15-minute break of structure because we know the 15-minute is bearish, right? Here, maybe you took some losses on something like this. Price was very corrective, pushing up higher. We know that the extreme was valid and that there's point of interest there, considering that if you look at it here, let's see, are we on the 15? If you look at this, here we have a buy to sell engulfing, right? We also have this wick. When we looked at it on the seconds, the wick is where we had the actual reaction to a strong demand. We had a demand that created two full-bodied engulfing candles to the upside. And this is where we had the flip, a buy to sell to the downside that basically created a swing to the downside. It had multiple bearish candles following the buy to sell. So we got a reaction and we traded off of the seconds. Our entry looked like that. And even if you missed that, you could have taken a continuation. You could have taken multiple continuations and, you know, catch more trades. So hopefully you enjoyed that video. Hopefully this was a good example of how to use the seconds time frame. I apologize that this video is kind of raw and kind of like more in the moment. Obviously I'm doing these, you know, without practice, because obviously it would take me several hours to practice to do this, and I spend more of the hours doing the actual markup and case study. So if you want access to this case study, it's going to be available in the description. Link will be right there. Once again, duplicated on the top of your screen, bottom right corner. You can go ahead and click on this, and you'll be able to modify or view certain type of things that you're looking for. I'll make more videos on the rest of it another time, but enjoy that. And if you want to join my Discord, links in the description. It's forever free. If you want free coaching, I give it away weekly in the group. So have a beautiful rest of your week. I wish you many great trades, and I hope this video helped you. We'll talk soon. Have a beautiful day. Bye.